I just want to show you how you can use a fib to show you how to get in and out of a trade.
Wait. Matron, take them away. Oh.
And a warm welcome to one and all. And if this is your first time here, I am the big fella. That is the Scruffy Trader. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. Oh, and talking of showing me things, there's my coffee. Because we all know Scruffy likes the coffee. Likes Winky as well.
Yeah, only when I've got the coffee.
Only when I've got the coffee. Well, I like you all the time. That's why we're going away this weekend. Anyway, cut long story short. Real world trading. What you see is what you get. I always do it in the moment. And what I'm trying to do is kind of show that on a regular basis. Now, this morning I had a good chat with a chap called Michael. A little salute to you. You may drop in the comments and sort of back up what I'm about to say. Now, in that discussion, we wanted to look at the euro dollar. So we did. And I made a prediction as to what I thought would happen, but also some trigger points. Now, what I'm going to do is I'm going to pull up my euro dollar. I'm going to strip it off and I'm just going to look at the raw data. In other words, the candles itself. So if that sounds good, you want to see more of this in the real world, do hit that little subscribe button. Genuinely helps. And if you find value, smash the like and the super thanks. Keeps the lights on. So let me flick the screens on and we'll see what we're banging on about. So I trade in the moment, always have, and I probably always will. Okay, now if you bear with me, I need to set up a couple of things.
Well, we're waiting.
Okay, back on track. Right, so I'm going to strip everything off. There we go. Now, the reason why I'm doing it off this is because I want you to focus on candlesticks. All right? Now, when we're looking at the hourly, we can see there's a huge drive here. So that interests me. But you also need to see what the bigger picture is. If you come out to a 4 hour, there is the big picture. There's there and there's here. All right? We have two major structures that we can look at. Now, if I look at building this up with fibs, and I pull that down to there are key areas within this. So if I drop on a level here, and I'll just put these in solid so that I can see where they're from. There, and there. Now, I have already made a predetermined decision that this is going short. All right, but let me explain. It's pushed up, it's come down, it's tried to push up, and it has failed. How do I know it's failed? Because it's taken so long and the pressure is that way. Okay. Now, if I take this out to the other side, and I put a fib retracement on, here, what I can see is it's crashed below the 50 and it is holding below the 50 of this movement. Now that tells me there's a full retracement coming, which gives me another level down here. Okay. There. All right. Now all of this is just kind of using fibs to guide what's going on. And you can't just rely on this. I have other elements, and if you come into the Scruffy Squad, you'll see exactly how I build these up and make a decision. But what I'm trying to show you is a framework. Now there's a framework of a fib holding below 50, a second framework showing you that that is still failing. So it's now give me this structure point, which happens to line up with them. Right, hourly. Let's have a little look, see what's going on. There is the drive. There is the reconciliation. and it's not going anywhere. In other words, it's just range bound. It's pushed up. Now, when I was speaking with Michael, I said this section here, because we can see that, can give good entry-exit points. So I can draw a fib on that. Just there. Just like so. And now I can just draw in some lines. Very simple. Just change the color. Put these in blue. To give me entry exits for short. Now, why short? Because I've already predetermined which way I'm going. All right. There we go. And then it can run down as far as there and there. So that's fully mapped chart. All right. See what's going on. That's given me some structure points. How do we know which ones might work out best? Well, you've got a structure here, it's pushed up and it's there. So this would be my first order point. Okay. So if I decide that I want to place some orders in. Now, what I also going to do here is I'm going to stage orders. Now, this is quite a strange way to do things, but bear with me, guys. Because what I'm going to do is I'm going to put 5 £1 orders here. And each one of them is going to have a different target. Okay. Well, they're all going to be put in at the same place. So I'll just quickly shoot these orders in. How many have I got? I've got 1, 2, 3, and 5. Right. So what am I doing now? Now what I'm doing, this is something that I was talking to the guys about in management of accounts. 1, 2, 3, 4, 5. Yeah. I want to be able to walk away from the screen. So each one of these, so we want that one at 10, got that one at 15. So I can now have this one at 20. This one at 25. And then this one at 30, which is there. So in theory, so it's 20, 15. Is that right? So 30, 25, 10, 15, 20. There we are. Right. So what happens here is, if these are triggered, they will run at 10, 20, 25, 30, 35. Right? So each one of these has an order of themselves. Now I can also do the same process up here. Okay. Now as that's moved up, I'm going to watch this. So what I'm going to do is I'm going to drop it to a 15-minute, so you can kind of see it in greater detail. And that is my first entry point. I'm now going to trail up every 15 minutes. Okay. In other words, that's pushing up. So that gives me that trigger point. When that closes, if it closes green, I'm going to move them to the base of this candle. Then if it moves up again, I'll move it up to the base of the next candle till they are triggered. But as they are triggered, they will each have individual orders, which will just cash out on the way down. Simple stuff. All right. Now, once they are triggered, I can then put in extra orders moving upwards to sort of get me more money, if I so wish, or get me out of trouble. And then I'll stage this all the way up to there. And if it breaks the high of this, well, there's a structure point, there's a structure point. The stop will be above it. That's it, game over. All right. But in the meantime, I've worked it out, seen what I want. And that's what we're going to do. So we always trail candles in the opposite direction. What's that mean? I'm going short, so I will trail the candles going long. If one of these turns red, I stop and wait for it to come. Easy stuff. So let me run the trade. I will trail this up till they're entered. I will then have extra entry points using these as sort of extra orders, shall we call it. And hopefully we'll get a few quid out of it. Now I'm doing this just as an example rather than my wage. So whatever I get, I'm quite happy with. All right. So let me run it and I'll speak to you soon. Okay, guys, looks like I'm stopped out on this particular leg, but the principle that you've seen was intact. Looking at this, you can see it triggered at this point, moved back to the blue line that I put in to the pip. So I had a succession of orders to run down into there. And the idea is just to carve. Now I broke them up so that I can kind of manage the trade. In other words, saves me trying to take off bits here and bits there. I can just shut off individual trades and collectively they make one big trade. Now this may well start moving back down to here, and I would just start the process again by putting a series of orders here, series of orders there, and then just work them through. Saves me waiting all the time. So what have I done? Now this is a relatively slow market, but on small position sizes, just carving backwards and forwards, 57 quid. Now on a day like today, today is incredibly slow in the markets because it's kind of deemed a bank holiday today because of events in the UK. The markets are dead as a doornail. So I'm happy with 50 quid. I genuinely am. Now, when it comes to the way I trade, some people like it, some people don't. But what I will say about the way I trade is I'm consistent. And consistency is what's going to get you through the day, because I trust the process that I do. You know, and the process that I adopt is I read the charts. So I read all the conditions in the charts, I make a decision, and then I stick with it, and then I overlay a framework to help get in and out of the markets. It's that simple. X marks the spot does not work. I've looked for it for 15 years. I can't find it. I'm not saying that you can't, but I'm saying I can't. And I'd like to think I know what I'm doing with this, because I show you every day what I do for a living. So there we go, guys. If you want to see some more, do drop in the description below. You'll find links to brokers, the prop firm that I use, and also my contact details. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.